Happy Friday, ladies and gentlemen, and welcome back. It's your friendly neighborhood PM, back for another week. Now, the markets haven't been so kind this week, so why don't we dive right into our top 3 points and see what's been driving everything. At point number 3 was Elon Musk pay package getting approved. Now, you might have seen Tesla CEO Elon Musk was up for $1 trillion incentive-based pay package that needed to be voted on by Tesla shareholders. Now, that was approved yesterday by about 75% of shareholders. Now, what this is, though, is heavily tied to operational milestones that Tesla needs to hit. Things like reaching an $8.5 trillion market cap, delivering 1 million autonomous driving robotaxis, delivering 1 million humanoid robots, and getting 20 million Tesla vehicles out in circulation worldwide. Now, for reference, since 2012, Tesla's delivered around 7 million vehicles. So that really shows just how aggressive these growth targets are. At point number 2, it's airline turmoil. So starting yesterday, actually, it was announced that the FAA and the Transportation Department is going to be cutting around 10% of airline capacity to help alleviate stress on airports and workers amid the government shutdown. Now, this is going to impact very major markets because it's around the 40 biggest major airports. So places like LaGuardia, Newark, Atlanta, Chicago, Dallas, Houston. You might have seen some clips of the Houston airport having a security line out into the street that was 5 hours long. Now, this is because they've got a drastically reduced workforce due to TSA, as well as air traffic controllers, thousands of them working without pay right now. So as long as this government shutdown continues to go on, we are going to continually see impacts to the air travel space right now, and really could jeopardize holiday travel as you get ready for Thanksgiving. And then finally, point number 1, it's more centered on the labor market. We had private job data come in, and according to the Challenger Jobs Report, which, like I said, is predominantly private jobs data, it showed around 150,000 job cuts in the past month. Now, this is primarily driven by technology sectors and warehousing, as AI adoption and a weaker spending consumer has really taken hold of the economy over the last month or so. But what this goes to show is that there starts to be some softening in the labor market. And if this continues to progress, then it's very likely that we are going to see the Fed cut another 25 basis points in December. Now, this is also, like I said, private jobs data. We do not have the government data that we would typically be also looking at because of the government shutdown. So we're having to take every kind of bit of information in as we process all of this. That does it for your top 3 points this week. What are we checking out for next week? Well, next week, it should be CPI and retail spending data. But since CPI is government data, well, it's up in the air whether or not we're going to get it. So if we get it, we're going to be reporting on that. Otherwise, we'll find something new to talk about as always. But that does it for this week's video. As always, if you have additional questions, please reach out to your financial advisor or dig into the week in review. And if you do not have a financial advisor and you want to talk to somebody, please follow our link and we'll get you connected with somebody. But as always, please go out, enjoy your weekend, and we will see you the same time next week. Thanks again.